Okay, so let's just be real for a sec. Diving into financial aid paperwork, it can feel like you're drowning in a sea of forms and deadlines, and the jargon. Don't even get me started.
You're speaking my language. It's a common feeling, for sure.
Right. It's like trying to put together a puzzle, but half the pieces are missing, and the picture on the box is totally out of focus. But hey, that's exactly why we're doing this deep dive today. We're going to break down those financial aid handbooks and articles you've got, pull out those golden nuggets of information you need, and hopefully uncover a few aha moments along the way.
I'm all for those aha moments. The
Yeah.
more, the merrier.
Exactly. So let's jump right in with those first crucial steps. We've got the 2425 FA Handbook and the FA Handbook.pdf right here. And they both mention the AFSA and the California Dream Act.
Those are like your two main paths you can take when it comes to applying for aid.
Yeah.
So you've got the AFSA, the free application for federal student aid. That's for any eligible citizens or residents. Then there's the California Dream Act. That one's specifically for undocumented students.
Yeah.
And both are super important if you want to access those financial aid opportunities.
Got it. So whether we're talking about federal aid, state aid, even grants, those applications are like the first step.
Absolutely.
Yeah.
You're the foundation. And this is crucial. The deadline this year for both of them is May 2nd, 2024.
May 2nd. Got it. Okay. Marking that down right now.
And you know, it's interesting. When I was first learning about all this financial aid stuff, I was surprised to find out that even if you don't qualify for need-based aid, you might still have options.
Really? I thought need-based aid was the whole point of AFSA and the DREAM Act.
Not at all. You see, there are also these things called non-need-based loans that you can look into. So even if your family's income is above a certain level, you're not totally out of luck.
Oh, that's a relief to hear. I know so many people who just assume they won't qualify for anything because their parents make, quote unquote, too much money.
I hear that a lot. And it's often not true. There are options out there. You just have to dig a little deeper to find them.
Okay, that's reassuring. So let's say you've got those applications in. What's next? That's where this need analysis thing comes in.
Exactly. That's where it can get a little tricky and honestly a little confusing. The government uses something called the Student Aid Index, or SAI, to figure out your financial need.
Okay, I'll be honest. I used to think that SAI number was basically like the magic number that determined my entire financial aid package.
That's a super common misconception. I'm glad we're clearing that up.
Yeah, please do. So if it's not the amount my family pays or the amount of aid I get, then what is it?
Think of it more like a financial thermometer. A higher SSI means a greater financial need, but it doesn't tell the whole story of what you'll actually receive, just one piece of the puzzle.
Okay, that makes more sense. So what else goes into figuring out how much aid I'm actually eligible for then?
Well, UCLA has this whole concept they call the financial partnership, which is kind of cool.
Mm.
It's this idea that it's not just on you, the student, to figure out how to pay for everything.
Okay, that's good because my bank account is definitely not overflowing at the moment.
Right. It's about the parents, the student, and UCLA all working together. So parents are expected to contribute what they can, and there are options like PLUS loans available to them.
Oh yeah, my parents have definitely been stressing about those PLUS loans.
It's understandable. They're a big decision. It's important for families to really think it through and weigh the pros and cons.
Totally. And what about students? What's our role in this whole financial partnership thing?
Well, you're expected to contribute too, of course, whether it's through part-time jobs, maybe a work-study program, even summer internships. And yeah, borrowing could be part of the equation too.
That makes sense. College is an investment after all. It makes sense we'd be expected to contribute to that investment.
Exactly. And the good news is UCLA actually aims to balance that expectation with your academics. So they don't want you to be so bogged down with a ton of work or loan debt that it starts affecting your studies, you know?
That's really good to know. It's not just about throwing money at the problem. It's about finding that balance, right?
Exactly. They want you to succeed academically, just as much as they want to make sure you can afford to be here.
And speaking of affording to be here, let's talk about those magic words, grants and scholarships.
Ah, yes, the free money everyone's hoping for. Grants and scholarships are amazing because, unlike loans, you don't have to pay them back.
Right. And the 2425 FA handbook actually lists a bunch of them. I see the Pell Grant, which is for those with exceptional financial need, and then the Cal Grants.
Those are some of the big ones. And this is where that May 2nd deadline comes back into play. Getting those applications in by then is crucial for maximizing your chances of getting those grants.
Okay, got it. Anything else about grants we need to keep in mind?
One thing, especially for those just starting their college journey, if you're a first-time applicant for a Cal Grant A, there's an extra step.
An extra step. What do you mean?
You need to submit this GPA verification form, and it has to be in by March 2nd, even earlier than that May 2nd deadline.
Wow, okay. They're really testing our organizational skills right off the bat.
I know, right? But trust me, it's worth it because those Cal grants can make a world of difference.
Totally. Now, I did see a little note in the handbook about these outside fee-paying awards or waivers. Something about your university grants might actually be reduced if you receive those.
Oh, yeah. UCLA wants to ensure that your total financial aid package is, well, balanced. They don't want to give you more aid than you need, so they'll adjust things accordingly.
Makes sense. So it's all about finding that sweet spot, getting the support you need without it being excessive.
That's the goal. It's about making sure everyone gets a fair shot at an affordable education.
So what happens if, life throws a curveball and something unexpected comes up during the year? Like maybe a parent loses their job or there's a medical emergency in the family. Things happen.
Absolutely, things happen.
Yeah.
And UCLA gets that. That's why they have this thing called an appeals process.
An appeals process. Tell me more.
So basically, if your family's financial situation changes significantly after you've already submitted your aid application, you can actually appeal to have things reassessed.
Okay, that's good to know. Life can be unpredictable, so knowing there's a way to adjust our aid if needed is reassuring.
Exactly. It's all about open communication. Just make sure if you do need to appeal, you've got documentation to support it, like layoff notices, medical bills, anything that verifies those changes.
Okay, so it's not just showing up and saying, hey, things are rough now.
Right. Be prepared. Come with the evidence.
Makes sense. You got to have your ducks in a row. So we've covered applying for aid, we've talked need-based versus non-need-based aid, grants, scholarships, even appeals. Feeling a little more confident already.
I know I am. And now we've got to talk about the big L word, loans.
Okay, yeah, loans. It's the one that everyone gets a little uneasy about.
Totally understandable. But before we even get into those larger federal or private loans, did you know that UCLA actually offers these short-term, interest-free loans?
Wait, seriously, interest-free? That sounds too good to be true.
Nope, it's true. They're meant to help students who just need a little financial bridge, like maybe between paychecks or while you're waiting for your financial aid to come through.
Oh, wow, that's actually super helpful. So what's the catch?
Well, there's a limit. You can borrow up to $200 or $350 if you can verify that you're employed.
Okay, makes sense.
And you have to be in good standing with the university, of course.
Right. Got to play by the rules to get those interest-free perks.
Exactly. It's all about responsible borrowing, even when it's a small amount.
Yeah.
Yeah, those short-term loans are definitely good to know about. But now let's dive into the bigger loans, those federal and private ones. That privateloanguide.pdf we've got, that's a really helpful resource for this.
Okay, yeah, so I keep hearing that federal loans are usually the better option. But I'm not going to lie, I don't totally get why.
So think of it this way. Federal loans, they come with these built-in benefits that private loans usually don't have. For example, you know those income-driven repayment plans everyone talks about? Yeah, those are usually only available with federal loans.
Oh, wow. See, I didn't even realize that. So, if your income is lower after you graduate, your monthly payments, they can actually be adjusted.
That's the idea. They try to make it more manageable, especially in those first few years after graduation when you're still figuring things out.
Okay. Yeah, when you put it that way, it makes a lot of sense.
Yeah.
So federal loans first, then explore private loans if you absolutely have to.
Exactly. Private loans should be a last resort. They often come with those higher interest rates and those less flexible repayment options, which no one wants to deal with.
Because those higher interest rates end up meaning you pay back way more overall, right?
Yep, it's true. Interest never sleeps, as they say.
True that. Okay, so let's talk about the thing no one wants to think about, but we kind of have to defaulting on your loans. The consequences sound seriously scary.
It's not something to take lightly, that's for sure. Defaulting can really mess up your credit score, make things super difficult down the road.
Yeah, the Consumer Credit Guide.pdf does not paint a pretty picture. Like wage garnishment, trouble getting approved for other loans, even renting an apartment can be harder.
Yeah, all of that's possible. When you default, it's like breaking a promise to repay. And it can have those really long-term consequences.
It's like this domino effect, right? You miss one payment, then another, your credit score takes a hit, then it's even harder to recover.
Exactly. It's a vicious cycle you want to avoid at all costs. But hey, let's not end on a scary note. We've got to talk about the student loan interest deduction.
Oh, yeah, I've heard about that. Something about getting a tax break on those loan interest payments.
That's the one. The How to Get the Student Loan Interest Deduction nerdwallet.pdf explains it really well. Basically, it can reduce your taxable income, which can save you some money.
Hold on, so it reduces my taxable income, not just like the amount of interest I owe.
Yeah, a lot of people get that confused. And get this, you can use it even if you don't itemize your deductions.
Real
Called an above-the-line deduction.
above the line. Okay, I'm going to remember that.
Yeah.
Who doesn't love a good tax loophole, especially when it comes to student loans?
Exactly. Every little bit helps. Although there is one tiny detail. You do have to have paid at least $600 in interest during the year to get that Form 1098E, and you'll need that to claim the deduction when you do your taxes.
Got it. $600. I'll keep an eye out for that form.
It's like your golden ticket. Don't
Ah.
lose it.
Okay, so we've been really focused on financial aid here, but these sources we've got, they actually touch on a much bigger topic, our credit scores, and how they affect our financial lives, not just when it comes to loans.
Totally. Financial aid, it's just one piece of the puzzle when it comes to being financially healthy, right?
For sure. And these sources, like the consumercreditguide.pdf, official consumer guide to good credit-min.pdf, credit score tips 2.pdf, they all talk about how important credit scores are. And honestly, it's kind of eye-opening.
Yeah, it's true. A good credit score, it's like having a good reputation, but for your finances. It can impact whether you get approved for loans, what interest rates you're offered, even things like renting an apartment or even getting a job.
Whoa, okay, I had no idea it was that important. So how do they even come up with those scores? It all seems so mysterious.
It does seem that way, right? But it actually comes down to 5 main factors. Your payment history, how much you owe, how long you've had credit, any new credit you've taken on, and what types of credit you use.
Okay, so basically how responsible you've been with money in the past.
Exactly. And the higher your score, the better. That tells lenders you're a safe bet, you're responsible, and they're more likely to give you those better interest rates and loan terms because of it.
It's all about building trust, right? Showing them you can handle it.
Exactly. And one of the best ways to build good credit, pay those bills on time. It sounds simple, but it makes a huge difference.
Okay, working on that. It's so easy to forget those payment dates.
Life gets busy, I know. Setting reminders, even automating those payments if you can, it can be a game changer.
Those are good tips, for sure. So what about checking our credit reports? Is that something we should be doing regularly?
Absolutely. It's so important. And you have the right to a free credit report from each of the 3 big credit bureaus. That's Equifax, Experian, and TransUnion every single year.
Oh, wow. Free. I'll take it. I'll be honest, I've always been a bit intimidated by those reports.
I totally get it. They can be confusing, but once you understand what you're looking at, it's not that bad. And honestly, it's kind of empowering to know what's in there.
Okay, yeah, that makes sense.
And the consumercreditguide.pdf talks about this. You really need to be checking your report regularly because mistakes happen. And if there are any errors, you have the right to dispute them.
Like, what kind of errors are we talking about?
It could be anything. Accounts that aren't yours. Wrong payment information. Like, what if someone stole your identity and opened an account in your name without you knowing?
Oh my gosh. That's terrifying.
It's a nightmare, but it happens. That's why checking your credit report is so important. It's like putting a security system on your finances.
I love that. I'm going to start thinking of it that way, like a financial checkup. Make sure everything's running smoothly.
Exactly. And the official consumer guide to goodcredit-min.pdf has this whole section on how to dispute those errors effectively.
Okay, good to know. Disputes, it all sounds very official.
I know, right? But it's actually not as complicated as it seems. The most important thing is to put everything in writing. Keep records of all your correspondence.
Okay, so basically, create a paper trail in case you need it later.
You got it. It's about being your own advocate, knowing what you're entitled to, and then taking action. Now, there's this thing that I know some people try, and it's called file segregation. Have you heard about this?
I think so. Isn't that, like, not legit?
Definitely not legit, not even a little bit. It's a credit repair tactic that's shady and totally illegal.
Wow, people actually try it. What does it even involve?
So they basically try to get new identification numbers, like a new Social Security number or an EIN.
Wait, so they're trying to erase their past financial mistakes by pretending to be someone else?
Pretty much. And that is fraud.
Yeah, not a good look. Not worth the risk.
Not at all. And ethically, it's just no.
So if someone's struggling with their credit, what's the right way to approach it?
Do it the right way. Don't fall for those quick fixes. Build good habits, like paying your bills on time, keeping your balances low, and using different types of credit.
Okay, so it's about playing the long game, being patient, and building that strong base for the future.
You've got it. And remember, if you're feeling lost, there are credit counseling places that can help you figure things out and make a plan.
Right. It's like having a financial coach in your corner cheering you on every step of the way.
That's a great way to think about it.
It's like we're building this whole financial toolkit today, huh?
I like that. And just like any good toolkit, we got to have the right tools for, well, every situation. So we talked about the loans, the grants, all that credit score stuff, but what about those unexpected things life throws at us? Those curveballs. That's when an emergency fund can really save the day.
Emergency fund, it's one of those things where it's like, yeah, I should have one of those. But then, I don't know, there's never any money left over at the end of the month to actually start one.
Oh, tell me about it. It's a struggle for a lot of us, but even if you can only put away a little bit at a time, it really does add up eventually.
Okay, so maybe I can swing like $5 here, $10 there. But how much should I even be aiming for? Like, what's a good amount to have in there?
The official consumer guide to goodcredit-min.pdf actually suggests having enough to cover about 3 to 6 months of your living expenses.
Wait, 3 to 6 months? Okay, that feels impossible right now.
I know. Sounds like a lot. Don't get overwhelmed. Just start small. Even if it's just a few bucks a week, it all makes a difference in the long run.
Okay, that makes me feel a little better. It's like those apps that round up your purchases and invest the change, right?
Exactly.
Yeah.
Little by little. And you'll thank yourself later, trust me. Like, what if your computer suddenly dies on you? Or your car needs a major repair?
Don't even put that out into the universe.
Right, but it happens. That's when you'll be so glad you have that emergency fund.
Okay, you've convinced me. Emergency fund, it is. Okay, so switching gears a little bit, let's talk retirement. I mean, it feels weird even thinking about retirement when I'm barely out of high school.
I get it. You're thinking retirement. I just figured out how to do laundry. But you know what? It's never too early to start thinking about it, even if it's just planting that seed.
Yeah. These guides mention this thing called compound interest. It seems like it's kind of a big deal.
It is. The earlier you start, even if you're only putting away a tiny amount, the more time it has to grow. And that compound interest really starts to work its magic over time.
So compound interest, that's where your money earns interest, and then it earns interest on the interest. My brain is hurting a little bit trying to wrap my head around it.
It's like a financial magic trick.
Tell me about it.
But seriously, it's a really powerful tool.
Okay, so start early. Got it. What about those 401k things I keep hearing about?
Yes. Those are fantastic, especially if your employer does that matching thing.
Wait, like free money for retirement?
Pretty much.
I'm going to need to do some more research on that, but free money sounds pretty good to me.
Do it. And hey, you can even look into things like Roth IRAs and traditional IRAs.
Okay, I'm adding that to my list. Become a retirement expert. For now, I think I'm going to focus on that emergency fund.
There you go. One step at a time.
So we've talked about loans, grants, credit scores, emergency funds, even retirement planning. Did we miss anything? I feel like we just covered like everything.
I think we hit all the major points. And this all really comes down to one thing. Knowledge is power, especially with your money.
100%. The more we know about how financial aid works, how credit scores work, how to handle debt, it's all so important.
Absolutely. It's not just about understanding all the rules and stuff, but it's about shifting your mindset a bit. It's about realizing you have choices, you have resources available to you, and you have the power to make smart choices for your future.
I love that. No more feeling intimidated by those forms or confused by financial jargon. We've got the knowledge and the tools to handle it all.
You got this. Think of it this way. You're the one in the driver's seat.
I am. And on that note, we're going to wrap up this deep dive. Now that you know more about your options, what one thing will you do differently to tackle your financial aid? We hope this episode has empowered you with the knowledge and the confidence you need to not just navigate the world of financial aid, but build a strong foundation for all those exciting things ahead.